Hello everyone, welcome to Price Action Trading Part 2. In the first part, we have discussed about what price action is all about, what are the various components of price action, and I also promised that we will be going and analyzing each of it in the subsequent parts. So in this video, we are going to cover two important concepts and then also certain guidelines that I'll be sharing with you in this video of how you can go about uh, deciphering the price action. So let me do a quick recap of what we discussed in the first part. We saw what is price action and what are the various components of it. It clearly involves multiple studies. One technical study, the candlestick patterns, standard pivot points, support zone and resistance zone, then supply and demand zones, then various chart patterns and trend line analysis, Fibonacci analysis, and so on. So many different topics are covered under price action. And today our efforts will be focused on learning how to draw a trend line and also what are the things to be kept in mind while drawing a support zone and demand zone. So this is going to be the main crux of it. And towards the end of it, I will also be sharing a quick overview of certain disciplines that you should have in order to ensure that you get the price actions right in your trade setup. So let's get started. This is our agenda. We'll be exploring how to choose the right time frame for our analysis and how do we draw trend lines. What is demand zone and supply zone? And then I will give you a quick overview of how to draw them as well. And then one of the important discipline is to play with the charts. You should have your own charting time. So that will be the key points that we'll be talking in this video. All right, let's get started. How do we choose the right time frame? Why is it important to choose the time frame? If you are choosing something like, say, 1 minute candle or 30 seconds candle, there is going to be a lot of noise. The fluctuations are going to be like super high, and you cannot make a meaningful interpretation of what's going to happen in the market. If you want to really know what is happening in the market, then we will have to eliminate the noises, which is possible only in the longer time frame. And the patterns that's formed in patterns, trends, and support and resistance that's formed in the longer time frame are clearly superior than a shorter time frame study. So if, for example, in a longer time frame, say about 15 minutes, it's saying bullish, and in a shorter time frame like 1 minute, it's saying bearish, obviously the weightage should be for the longer time frame, not for the shorter time frame. The reliability is more, right? So that is why it is important to choose the right time frame. And within the time frame study also, there are a lot of things that you should keep in mind. Some of you might be like, BTST traders, somebody who buys today and maybe sells tomorrow or day after tomorrow. Somebody is, holding on positionally. Maybe you buy it today. Maybe 1 week later, you may want to, sell off. Some of you may be, an intraday trader. Now, for each of these different kind of traders, time frame study would be slightly different. Somebody who is playing on an intraday basis, for them, a monthly chart or a daily chart would make very little sense, right? Similarly, for somebody who is playing in a month-end contracts or some like positionally they are carrying that for about a month or two, for them what is happening in next 5 minutes is so immaterial. So that's exactly why we got to choose right time frame, and we will see why it is important from a live example. So I will be opening TradingView. As you see, we are on TradingView. This is the chart of Nifty 50, all right, and we are in a 1 minute time frame. As you see that there is a huge fall today. Today is October 3rd. We had a huge fall today, and then the market, consolidated almost between a band of about 500 to 480 levels. That's the band in which it traded. After the first breakout, it is where we have been trading for the whole day. Now this is 1 minute chart. It looks like, okay, after this the market has entered into a consolidation and then formed a band, we might want to say, in the sense, if I consider this, you can see that the market clearly has been trading in this zone for the entire day, right? So can we call this market is into a consolidation mode? Can we conclude that? Absolutely not, because the preceding trend is a downtrend. It looks like a downtrend, right? Like massive downtrend. Then there is a recovery, and then again another fall. It looks like the market is heading south. But how do we confirm? Can we just blindly get into put sides and then expect the market to fall further? What can we do with this information? So this is where higher time frame study would be of great help. Now, if I change this into, say, 5 minutes, would it make any difference? It throws up a lot more information now. It not only considers this fall, it also shows what has happened. Previously, also, we had a fall and then it reached this bottom. And look at the recovery. It has recovered so strongly back over here, right? Again, it got rejected and then it came here. Now we are seeing a pattern. Initially, it got rejected here. Second time, it got rejected. Third time it got rejected. Again, fourth time it got rejected. So looks like around this level, there is a strong rejection, isn't it? So when we go deeper with the time frame analysis, we get more information. So that is why it is important to analyze the patterns and trends in longer time frame. Maybe now if we switch to 15 minutes, we have altogether another set of information we got to really go back and see what's happening over here. So here is one area where the momentum shifted completely, and again we are at the same levels as here, right? So it throws a lot more information. So if I go into, say, 1 hour time frame, we have additional informations coming in now. So as you see, the different time frame that you study, you have more candles revealing a lot more information for you to take well-informed trading decisions, right? So that is the main crux behind choosing right time frame. So the entire candle of today is just done here. There is no spikes, no consolidation, nothing. Simply it has been condensed and then put in over here like about 5-6 candles. That's it. But if I go to this 1 minute time frame, as you see, there were like a lot of moves. Like I can show you over here. You can see there is enormous amount of actions here. It doesn't read well. So much of noise over here. We are not able to process clear. So this is one of the reasons why it is important to choose longer time frame for better accuracy in our analysis. Now, another part. Now, some of you may be wondering, okay, how about 1 day candle? Like, can I go and then choose some 1 day candle? Yes, this is also like looking great. Now, if you see, it gives a completely different picture. It clearly says that the market is on the up run, and then it has taken a retracement. Again, it has gone up. Again, it has come down. Now, we are not that, it is not that obvious that the market is going to go down, right? Initially, it looked like with short time frame, it looked like the market is completely crashing, it's going down. But when you went into this day's candle, you see that it is more like a retracement happening, and then clearly we need to wait and watch for how the market is going to react around this level, and it might take many days and weeks to give us a clarity on the trend. So at this point, it can go either way. It can be a bullish move or it can be a bearish move, but right now it is indecisive. So we are able to make some better judgments, cautions, and precautionary measures we can take by looking at longer time frame. So longer time frame helps us to take strategical decisions for long term, and it also helps us to keep in mind of the reactions that's happening in the market as compared to the long term trend. You can see, you might be seeing a downtrend, but sometimes you might want to take against the trend positions in order to be more successful. The reason could be the long term study can say that it is a support zone, or it can be a demand zone from where market is going to reverse. So you got to pick up the clues from various time frames and then try to correlate with each other, right? So that's the principal reason why you should be giving a top priority for time frame study, right? So determine what is your trade setup. Are you an intraday player? Or are you a BTST player? Are you a person who does positional trades? Or you just a scalper? So depending upon that, you should choose your time frame and analyze to decode what the market is telling you, right? So let's switch to the next topic. All right. Now let's focus on the next topic, that is drawing the trend lines. How to draw a trend line? Basically, if you look at the chart, you know where the highs are and where the lows are. And then you can clearly recognize the swings that's happening. Probably the market reaches a particular point, and from there on, it reverses its trend. And somewhere it is finding some support and then keeps going further. So what are those points? When you look at the longer time frame, you can clearly see at some points the market is finding stronger support, at some points it's finding strong resistance, and then it's able to give us some sort of idea about where the market is heading. And when we try to map that with the help of identifying where the highs and lows are, uh, we will be able to find certain patterns. And I will give you an example with Nifty. Uh, but the general ground rule is that at least it should touch 3 points minimum in order to form a trend line. If there are less than three, like only 2 points you are able to connect, then it is not a valid trend line. It should at least connect 3 points, right? The more number of points are formed within the trend line, the more better it is, right? And then you can also verify it with the longer time frame, whether it is respecting or not. And then you should also be cognizant of the fact that different time frame reveals different outlook. Maybe in a longer time frame it could be range bound, in a shorter time frame it could be like bearish, in a different time frame something in between, maybe you're seeing in one day it is like range bound, and then in 5 minutes it is showing bearish, and then in 1 hour it is showing uptrend, then it's kind of mixed, right? Like, so you might want to consider all these before you pump in your money into the market. So how do you identify how to give weightage for which one should we give higher weightage? So the longer the time frame, the better it is. The results are going to outperform the shorter time frames for sure. So it has been tested from my own experience. I feel that the longer the time frame, the more is the reliability. Shorter time frame sometimes can beat longer time frame. I'm not saying, but that is all like some sort of news and some sort of some extraordinary events can trigger such moves. But otherwise, longer time frame always outperforms the shorter time frame, right? So let me get to the charts and then show you an example of how to draw trend line, right? So we are back here into the Nifty charts. You can see that this is a day's candle. Now, clearly we see that this strong upside moves happening. So what should I do? Should I now the question is that I'm starting from here because this is where the base. Now if I connect this all looks like a trend, right? But we have clearly broken this and then market had gone down. And then finally, if I continue to extend also, it doesn't make any sense, right? Like once the trend over here is broken, we don't have to really consider this. What we need to do is to try to accommodate those points. Now I am trying to see if this point, let me zoom in and show, if this point, yeah, it's touching here, then here we have another candle touching it. Again, lot of points are getting connected, right? So this is a quick blip and then it went up. So I would say I would really ignore this part because market has come down and then it has retraced and trading currently above this trend line, right? So if I continue to extend this, you see that, almost 1, 2, 3, 4, 5, 6 points are connected, right? It gives a very clear indication that the market is going up. And then when it broke, we know that the trend has reversed, and then it is not like just once it has come down. It has consistently given a gap. The gap is also a strong momentum indicator. So it fell, gone with a gap, and then it moved further away, and then it is struggling to reach this level again, right? Now if I wanted to really extend this and then keep it over, so this we are trading below the trend line, right? So that is a bearish indication for sure. But at the same time, from the past it has been a strong upside move. And if I wanted to really accommodate this and then see, it is all like, you got to do all sort of trial and error things. Maybe you wanted to connect only 2 points now and then see. Then there is a third point support and then again it has broken. Now when it tried to touch this, it has reversed. So as the market is trying to re-enter into the trend line, it got rejected. You can read it in as many different ways as you can. So there is no single right answer, right? My analysis and your analysis could be different. And then if you give it to somebody else, they would read it differently. So point that we have to keep in mind is at least 3 points should be connected. Do we have 3 points here? Yes, 1, 2, 3 points. This green candle is what I am talking about, the third point. It has come, taken a support, it traded above. So 3 points, it is clear to me that positionally we had an uptrend, and here the market has taken a break and it has come down. Right now, does it indicate bullishness or bearishness? We got to wait and watch. It's not like once the trend line is broken, then entirely everything is going south. No, not like that. We also have to give weightage for other factors in the price action, right? So that we will discuss a bit later, but this is how you evolve. Now, a trend can be a very surprising thing. You will be amazed to see not only that a trend needs to be on one side, it can be a channel as well, like how we see over here. It has 1 point over here, then 2 points. Is it enough? No, definitely not. So I am trying to see if I start a trend line from here, does it respect? Now I see 1, 2, 3 points. Yes, 3 points got connected, and you have a channel over here, right? Sometimes a trend can form channels, it can form bands, and we have to keep a closer eye on all the highs as well as the lows, and the more that we are able to decode, the better information we have to uh, make the trading decision. So clearly the upper band was never tested again. The lower band, it came, got rejected. So positionally, this looks like a bearish reversal sign. This is a the market attempted one more time, but then it got rejected, coming down. Looks like bears are control, but really, do they have control? Let's check that out. Right now, having done this analysis in 1 day candle, now if I go to 15 minutes, look at this. Look at this. Now we have too much of noise, right? It is not so obvious as it looked like. So in 15 minutes, got rejected, and then it looks like the market has been in a range bound consolidation. Maybe it gives you a different outlook now. Probably over here, if you see, it looks like the market is in a band, right? It looks like there is a lot of consolidation. The market entered here on 21st of July, and then you were trading for last so many months within this band, right? It looks like we are consolidating for months together over here. So how reliable is this, right? That's why we got to study in different time frame to understand what are the various patterns that's formed. Maybe if I switch to 1 hour, we might be having a different clue, right? Now, yeah. Now you see, there is more like, left shoulder, then head, and then right shoulder. Now you see this one. It's fantastic. If I choose an head and shoulder pattern over here, you most likely we might have an inverse head and shoulder pattern over here, right? So just trying to complete. Right? So we have an inverse head and shoulder pattern here, which means there is a breakout that we can expect on the upside, which rightly did. And this is 1 hour time frame. So like I said, the accuracy levels of 1 hour time frames are far more superior. Let me try to measure this, right? So this is about almost like 2,800 points. And if I go and then place it over here, it's saying something totally different now. It's saying that we are heading towards 21,000, right? So different time frame analysis reveals different things. Now, I cannot say that you should only focus on 1 hour, should focus on 15 minutes. No, I am not here to say that. You got to see what is working well for you and find an an optimal mix of weightage given to all these time frames. Okay, and I'm saying you should consider all, but then give different weightage to different things at different market conditions. That's the very important thing, and it's going to consume a lot of time to reach there, right? So, uh, trend lines are, what are the things to keep in mind when it comes to trend lines? At least two sorry, at least 3 points should be connected. The more the points that is connected in the highs or the lows, the better it is in establishing a trend line. And trend lines can sometimes be a band, a channel. So it can come in many different forms. You should observe and then plot it in your charts, and then maybe give a different color coding for different time frames. Maybe darker ones for longer time frame, lighter ones for shorter time frame. You can give a color coding to differentiate things, but then it is important for any price action trader to give weightage for all the time frame studies. I personally give a lot of weightage for 15 minutes, 1 hour, and 1 day. Right? So let's focus on the next topic. So this is the next important topic, establishing supply zone and demand zone. Let me give a context to what this is all about. Many times people confuse this with support and resistance zone. Support and resistance are completely different from demand and supply. How they are different, we have to really understand the concepts of smart money. Smart money means people with huge capital, financial institutions, foreign investors, FIAs, DIAs. These guys don't buy anywhere that they feel like. They will be entering into the market, buy some extraordinarily huge quantities, huge volumes will play when they enter in. And as they enter, you can see a sudden fierce spikes happening in the market in terms of price movements, in terms of short covering rally, or long unwinding whatsoever. It is the fierceness you can feel clearly when big players enter into the market. And why they enter, that's the very important part. When do they enter? So let's understand the word zone, right? Zone means it's a band. It's not one single price. For example, market is at 44,500. It is not when the market is at 44,500 that the big players will come. They enter in a band. The band means something like maybe 44, 360 to 430. Maybe they have, that is the band. Within that band, they will be investing a small portion of their investments in a staggered manner. And then once that is fulfilled, then obviously if the market goes right in that direction, they'll be happy. And why it is called a band? Because it's not like one time that they take and then they will just disappear. A band means it's a huge order and it cannot be fulfilled in one go, right? So the market has to retest it multiple times. If I'm planning to buy 1 lakh quantity, just one spike I will not be able to buy 1 lakh quantity, right? So when it comes to that band, it will maybe execute about 5,000 quantities. It goes up again. The market will be allowed to be dragged down by the small players. As they come, then I'll be able to buy, say, another 7,000 quantities. Likewise, I will accumulate over time, then fulfill the 100 percentage of my orders that I would like to execute in that bank, right? So once that is all done, then there will be a fierce move, right? So that's why it's called zone is a band of price, okay? And they will not be executing all their investments in one band. They would have identified so many different bands. Okay, probably the market is at 44,500. I will invest there. My next level of investment is only at, say, 42,300. Then they would have also identified the next area where they would like to enter in. Maybe that is 38,500. So they have identified some specific places at which they would like to bring in their money, right? So what are those areas and how can we as a small player know where the big players are going to enter, right? And that is exactly what we are going to learn in this particular segment. And zones are the places where the critical decisions are made in the market, and the breakout and reversals are usually so fierce, and you can expect a strong price actions as the market touches these zones. Yeah. So let's go back to Nifty charts. Then I'll show you how you can identify the demand zone and supply zone, right? As you see, we are in 1 hour, right? And let me just switch to 1 hour candle, and then let me remove all these patterns that we have drawn. All this band I will remove. All right. Now I wanted to see historically what has happened with the market, and even we can go for like 1 week and then see what has happened with the market. From 1991, if you see, it has been in a very conservative, small moves were happening. And then for almost like 12 years, market was almost trading sub 1,000 rupee ranges. And then there is a sudden spike, and then boom, again it crashed, again it boomed. Then you see that market has been like going to the sky, right? So clearly this is the larger frame that you see. But now I wanted to check from here. It was fine. Like all through these years, it was just gone up slightly and then came down like 1,800. Then it came to 750. Again, all through these years, it was like below 2K. Mostly it was trading below 1,000. There was only one spike in early 2000s, and then that gain was also lost because of that bubble. Then once we had this blast and then it went up, you see that there is a massive correction happened at this level, right? This is where the massive correction happened. Now I wanted to really give some attention to that. Now this is the place where market has taken a strong support, right? Now I wanted to say that here is one point that the market has decided to bounce back, right? Why I am giving it a green color code? It's because you see the market has come down, but it has come down so many points, but then it did not break this and then go further down, and it never allowed the market to come and test this ever again, making it the strongest buy zone. Yeah. Then you see that the market again, reached the peak, it got rejected. Again, it reached the peak, got rejected. But the fourth time that it broke, it clearly, made a new high. Again, as it came down, you see where it is finding its support now. It's finding the support exactly at the place where it got rejected in the past, right? Making it another band of support around this level, right? And this is one. Maybe if I wanted to keep it more accurate, I can go and do this. Now you see this here, it got first rejection, second rejection, third rejection, and then as it broke, this one started acting as support. So this is where the second support zone is. Again, went up, came down, went up, came down all the way, but never reached this level. So maybe if I wanted to see where the institutions are looking at re-entering, after this, maybe this is another zone in which the institutions are getting in, because you see why I drew this. It rallied, and clearly this is the 2020 fall, and after that it rallied and then it got rejected again, another new. The moment it came here, it fired up again, it never retested. So this is three zones that I'm anticipating to be a strong support, right? Now this is weekly, right? I want to bring in more accuracy. So if I convert this into days chart, I will find more candles now. Now you see, now we have enormous amount of data, and then I will be able to also find something intermediate. Maybe I don't want to confuse myself. I wanted to draw something, but then how do I differentiate this zones from the days zone? Maybe I would like to give it a different color code. Maybe I would like to give it an orange, saying that this is from the days candle. Likewise, you can go ahead and then decipher what are the other ways to improve your accuracy levels and find the in-between supply and demand zones. Maybe this is like a small supply demand zone. Now you can really, if the market falls, you know for a fact that this particular point was acting as a strong resistance, this particular point is acting as strong resistance, again it got rejected, and once it broke, it made a new Y, making it one more level of strong buy zone over here. Okay, and this detail I can get only from day's candle. If I go for week's candle, it may not even appear. Maybe it might. Let me check. Yeah, maybe very difficult to keep track, but then in this case, you can convert this into green. And yeah, so what you have here is another support zone. So even if the market comes down, where I am expecting it to bounce off, in this band, I am expecting it to bounce off. Now, what is the price band? That is 18,450 to 18,900. So this 500 points band is where I'm anticipating it to bounce back and find some strong support, right? Until then, market may drag quite comfortably as well. Now, if I wanted to add more accuracy levels to this, I can go ahead and then study it in say 1 hour time frame, and then maybe instead of keeping it as a 500 points band, maybe I would love to reduce the size of it by this. Here is where it got support, here is where it got its rejections, right? Again, here is where it got tested, and these are the points where maximum number of points are touching this band. I'm going to capture that. As you can clearly see, this area is where it is finding strong support and then going up. Now, look at the band size. Now, 18,670 to 18,900. That is a smaller band now, right? So you can go on adjusting this and then find where there is more demand in the market. So when I see the market coming and touching over here, I'm expecting it to bounce off super fast. And if it breaks this, then the fall could be very fierce. It can be, calling for a recession or so. That sort of power it is. That's why this is called the power zone in my view, because this is where the market makes the most critical decisions at this point, right? So that's how you arrive at it. Now, there are also points where the market gets rejected. That will eventually become, so here is one rejection, and then probably put it over here. This is where the market got rejected. I will give it a red color, saying that this is where the market is finding its rejection. This will act as a supply zone. Okay, here is where the demand is. Demand is where the market is, where the buyers are going to enter in and then push the market up. That's called a demand zone. Supply zone is where we are tired of market going up, and then all the people who have participated in the rally wanted to exit and then square off and book their profits. That's a supply zone. So supply zones become demand zone, and demand zone can become supply zone over time, because in the past, if you see, literally this was this is where the rejections were happening. So this was once upon a time, this was the supply zone. Now it is going to act as a demand zone. So this is a flux. It will keep changing, right? That is also one of the reasons why you should pay attention to your charts, and then relook at it, revisit at it at different times, then ensure that your analysis is right and up to date, right? So very important concept, and I'm sure you might have tons and tons of questions about how to draw it. Definitely in a video like this, you can only cover as much as this, and probably join in the Telegram group, and then shoot your questions over there or put it in the comment section. I'll be able to try to do some justice. Maybe you can put it in the Telegram and then ask questions so that we all can collectively learn. Other members will also learn. So try it out. It's going to consume some time before you get it all right, because it's not enough going in, because once you have a band of 1,000 points, it doesn't make any sense, right? Like such a big zone that you have drawn, how can you make accurate decisions? So Although you draw it in a larger time frame, you have to shrink it to the smaller time frames as much as you can, and get it as accurate as you can. I know that's the clue I can give you, right? And so that this is the part. Let's move into the final segment of the this video. That is having your own charting time. Like I said, chart is your friend. Friend and all can reveal only when you spend your time with the charts. So chart is your friend. Play with it, and then try to form your view. First thing is, let it be right, wrong. All these things can be, evolutionary in nature. You form a view first. First you say that, okay, positionally, what is it? Long term, what is it? Short term, what is it? You just, try to define what is the trend in all these three different segments. And once you have that, observe how it is happening, review it, see whether it is following your long term views, or if something has gone wrong, why it has gone wrong. Do your own analysis and diagnose it. And then the best thing to do a chart study is after the market is closed. While you are in the market, I am sure that most of us would be carrying some positions, and then our analysis will be biased. Maybe you are carrying a call option, then your eyes are going to focus on all the factors that's going to favor your position. You will not be neutral, you will be totally biased, and your judgment will be clouded. So I wouldn't recommend you to study the market while it is open. You should be playing with the charts maybe over the weekend, after market hours. Try to be as neutral as you can, and that's the only discipline that we should be building. And trust me, it looks like very, very simple thing, right? Like one time I opened the chart and then draw all these things, then I don't have to care, no worry about it, I'm done. No, it's not that way. You have to review it time and again, monthly, at least 4 times you got to review. Every weekly basis you should be reviewing, at least weekly basis. And then you should do this for minimum 6 months to get a hang of your own analysis. It might look so simple that what is there, some trend lines, some sort of patterns. I found this cup and handle, this flag and pole, all these things I have mapped it. There is nothing to do further. We might be very likely to write off our final assessments, but trust me, those 15 minutes or 20 minutes that you're going to spend extra on the weekend is going to save you tons and tons of money and your capital, right? So please consider this as the highest discipline when it comes to price action trading. You should spend very basic requirement in this is you spending your time with the charts, right? If you want to have a very healthy relationship, you have to spend time with your partner. That is the only way to build relationship. Similarly, if you want to make money from the market, the only way, particularly if you're a price action trader, there is no other way. You've got to spend time with the charts. You are missing out on what is happening in US market, European market, crude. Fine, completely fine. But if you call yourself a price action trader, you cannot really claim so without looking into the charts or doing this sort of analysis. So I hope this video gave some insights into how things work. Let's keep learning more about price action trading. And before I conclude, this is all the areas that we wanted to touch upon. Right now we are done with trend line and demand and supply zone analysis, and I will be focusing on the other components and tools in the next video. Thanks a lot, everyone, and have a great day.